All right. Boy, that time flies when you're having fun. Great to see you here once again this evening. It's time to get back to work here tonight. It's Tuesday evening. It's March 31st, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best levels of support and resistance and the best entry setups coming for tomorrow's trading session. And I got a jam-packed video in store for you tonight because all the charts are prepped up, as you can see. We got some oil, some S&P, and some gold. We have a lot to talk about on the charts tonight. Get some great setups we're tracking for Wednesday's trading session. And of course, speaking of Wednesday, we get some big news tomorrow. Got some oil news, got some inventory news. We'll talk about the calendar for tomorrow. I want to make sure you know the most important news tomorrow so you know what to avoid and where to make sure you're finding the best setups. So we'll grab the charts, we'll grab the calendar. I got a great video in store for you. Before we jump into the lesson tonight, though, I always want to remind you, make sure you subscribe to this YouTube channel. We're the only place projecting our setups for the following day. I don't want you to miss this newsletter, so hit that subscribe now button, hit the bell icon so you always get notified. And don't forget, if you have any questions tonight, drop those questions in the comment section below. I'll be checking comments to answer questions after we finish up here this evening. And as always, if you tune in every evening, thanks for showing the love. Hit that thumbs up button for me tonight on the video if you tune in every evening and love this video newsletter. So thank you so much for being here. Subscribe. Drop those questions in the comment section below. Hit that thumbs up button and we'll be off to the races here tonight. I want to get this video started though by taking a look at the calendar. Let's grab a look at the economic news calendar here tonight to kick off today's trading session, courtesy of our good friends over at Econo Day. Today, of course, is Wednesday, or tomorrow is Wednesday. Today, of course, is a Tuesday evening. We're going into, as you can see here, a brand new month, right? So anytime we have the end of the month, right, we talked about this last night, we always expect, as we finish up in the month of March and we go into the month of April, we do expect to see increased volatility. And you may remember we had a plan for that, as you recall. Whenever we have volatility that increases, what do? We cut down our position sizes, we slow down the time frames, wider stops and targets, and we cut down those position sizes, right? So once we see volatility start to kick up, we kind of slow down the time frames to quiet down a lot of that extra noise. Because of those slower time frames, we use wider stops, wider targets. And because of those wider stops, we have to cut down on our position sizes. So tomorrow we'll continue to adjust based on this increased volatility. This is not very typical, just so you're aware. This is not, we aren't always this volatile, right? We're obviously seeing a lot of volatility as this spread of the coronavirus makes its way from east to west here. So we know this is not going to last forever, but we want to make money in the meantime to do it the safe way, slow down those time frames, widen out those stops, and cut those position sizes down, right? We're trading bigger stops, smaller position sizes. Now, as we go into tomorrow, we do expect to see more increased volatility. We know right now there is kind of that black cloud hanging over these markets right now, right? We've been talking about that here all week. There's kind of this cloud hanging over these markets right now that, you know, the updates we continue to get from the CDC and, of course, right, throughout the world regarding this spread of this virus. So that's the known unknown as we go forward. I think everybody on the planet right now is watching headlines, and we know that we're only one good headline or one bad headline away from really getting some really rip-roaring markets here this week. So increased volatility, we know we're waiting, kind of walking on eggshells right now. When will they tell us more about good news or bad news about the spread of this virus? That really is the big market-moving event that we're all waiting for here right now. As far as scheduled news tomorrow, we got some pretty big news here tomorrow, and if it wasn't for that cloud of the coronavirus hanging over our heads right now, we would really be looking forward to trading these news reports here tomorrow. First of all, you got that ADP employment number at 8:15. This sounds like a very big news report. You're probably not going to see that much of a response to this. People will usually put on long-term positions ahead of that employment number on Friday. Friday, that's the number that will move these markets around. That's the number on Friday morning that you want to care about. So I wouldn't worry too much about the employment number there at 8:15. It sounds a lot more important than it really is. But the rest of these are really, really big numbers here. Anytime I see the number PMI, right? PMI, ISM, I'm thinking gold, I'm thinking crude oil. So these are two big news events tomorrow at 9:45 and 10 o'clock. And then speaking of crude oil, right, we got the employment or the inventory number, the what they call the petroleum status report at 10:30 Eastern time. Now again, under normal conditions, these would be pretty powerful reports here, and we'd probably get a pretty good amount of momentum off of these reports. We'll have to kind of wait and see. I think a lot of this will have to do with how choppy the waters are coming out of Asia and Europe as we hear more about the coronavirus. Now, most important thing for tomorrow is there's a lot of known unknowns, but one thing I will not be doing is trading in between 10:15 and 10:40 tomorrow morning on crude oil. Very, very important to keep in mind. This is not a mild-mannered news report. This can be a pretty violent report. Now, given the last couple reports, because this coronavirus cloud, we haven't really seen as dramatic of response. But I will still respect the potential of that being a very, very volatile time. The problem around that weekly report is the market usually gets really thin and really difficult to trade a few minutes ahead of that number at 10:30. And then after the number comes out, it becomes a very unpredictable time to be trading. Keep in mind, too, this is only for crude oil, right, between 10:50 and 10:40. We, of course, will have plenty of opportunities on gold, S&P, and our other favorite markets in the trade room tomorrow. So again, keep your eyes open for those headlines. I'll have my real-time news feed running tomorrow morning in the trade room. I am certainly going to be at my desk between that 9:45 and 10:15 window. That's the one time you got to be at your desk tomorrow. If you got an hour to spare tomorrow, that is the hour you want to dedicate, right? That 9:45 to 10:45 there tomorrow. And of course, don't forget tomorrow morning and every morning, right? We're going to go out and we're going to trade this stuff together. What I'll do is I'll put all the registration information to get registered for our trade room. You got to be a client to join as a client. I'll put all the membership information in a link for you right below this video or in the description of this video on YouTube. All right. So don't forget 8 o'clock Eastern time every single morning, Monday through Friday. Right. We'll trade this stuff together. All the information in the description of this YouTube video. Let's keep this party going though. We know the plan here for tomorrow. We know we're expecting more volatility. We know there's a little bit of tiptoeing around for crude oil later in the morning. Which reminds me, let's get these charts all prepped up here for tomorrow as well. We get some big news on oil, right? Let's take a look at that oil chart to kick off today's trading session. What do we know about oil right now? Well, we know that we had that range from yesterday's trading session. Anytime we have a trading range, we always know what? Buy low, sell high, avoid the middle. And then what were the two patterns we talk about on range days? We talked about this a lot last night. Failures and breakouts, right? Whenever a market tries to break out, we look for failures and we sell back down into that trading range. Market tries to break out, we look for failures and we buy back up into that range. That's the key. The range is a balanced market. Anytime we see a range, we know that tells me the markets are balanced. And of course, that balanced market, think about that range as a big magnet. What goes up will come back down. What goes down will usually come back up. But the way this market's been acting lately here, this market's felt a bit like it's tied to a cinder block and tossed in the river, right? It's been a pretty heavy market, as you can see here, right, as we approach that $19 a barrel right now. So we know we're range bound. Range bound markets say buy low, sell high, and focus on failures. We saw last night that beautiful example of the power of a pendulum swing, right? We got that pendulum swing. They went up and filled that gap. We talked about this last night. It's almost funny how those gaps work so well. And again, that 21.84, that is the gap from last Friday's close to the Sunday evening open, right? That gap It'll be there all week. It'll be there all week. 2184, leave that level right there on there all week, and that will be a price magnet as well. So now we saw the pendulum swing. I've adjusted my pendulum swing now, so now we get a much bigger, juicier target now for those sellers down around that $19 a barrel. And so we know where the bears want to go. The bears want to get back down to retest these lows. They're drooling over that juicy target below 19. And what else do we know here? We know momentum is firmly in the hands of these bears. We get that 1, 2, 3 reversal, right? Marking up those highs off of that low, right? Or sorry, marking up those lows, right? Off of that high. And you can see sellers came in and gave it a good whack off the top of that, right? Of that previous hidden channel. We know the bears have momentum at this point. I want to be following that momentum in a bearish momentum market. I want to find levels of resistance to be a seller. So of course, I'm drawing my trend lines off these new lows. I'm poking it back up at that high. That's a fantastic level of resistance. I'm also looking for prior swings, right? I'm looking for trend lines overhead. That will be a level of resistance as well. And you'll notice all of this tries to accomplish one simple goal, and that is to use that magnet, right? That range as a magnet. So we know we're bearish. I want to be a seller. I want to get up inside my resistance areas overhead so I can sell high and use that range as a magnet. Now, as we go lower here, the hard part is going to be trying to buy. I'm not going to want to buy this market until I can see some specific entry setups, because as we go lower, that momentum is going to be really difficult to mess with. So I do want to buy low, but I've got to look for a very specific type of entry pattern to be able to absorb all of that momentum. And there's definitely a chance here that we may get some, we may see buyers. There's a lot of people right now that are trying to pick the bottom. You know, I mean, we haven't seen $20 a barrel my entire career. So a lot of people right now, I'm getting a lot of emails right now saying, why can't I buy, right? Why can't I buy these bottoms and just no stop loss and let it run? You can't buy these bottoms right now. You can't pick the bottom right now because of what we have right now. This is potentially going to run all of those buyers who thought they had surely picked the bottom of this move, right? Well, it doesn't look so good anymore. And right now, there's a big old bullseye right on those lows. And so I would imagine a lot of those buyers are probably starting to get nervous. They got some pretty good results right in the short term, but I would imagine those buyers might start getting nervous and start to pull their orders a little bit early. And you know what that's going to do? It'll accelerate that move going lower. So I definitely want to be ready for some possible shorts as we make this move lower as well. Okay. So we talked about a lot here so far. I want to be a seller at levels of resistance. Let's break this down here now. Get a little more closer up on this chart. I know where my sell zones are. I know where my no trade zone is. I want to be a seller at resistance. Now, when we get a pullback here, I've got my levels marked up. I know where I'm trying to get short off of. It all depends on how the market pulls back. For example, I've got my key level of resistance here. If I can get up into the high of this channel, if I can get up into these levels overhead here, I'll look for just a straight up buyer failure pattern. As the market tries to go higher, I would anticipate buyers will try to buy the pullback, right? And once they do, I know exactly where their stops are and I can sell right into those stops. Almost 15 years ago, I hired my first trading coach, and one of the first things he explained to me was the easiest money you're going to make in a range-bound market is fading breakouts. Whenever you see a market try to break out of a range, just wait for those breakout pullbacks to fail and sell into it. And that's exactly what I'm going to plan on doing here in the short term. Now, there's also potential. We've seen a lot of these big moves overnight. There's a potential this market may really pump as it goes higher here. It's not going to be a breakout yet. We'll talk about a breakout in just a moment here. But if it really starts to push higher here now what you want to wait for is that that 1, that 2, and I call these nested failures. Now, these nested failures, same idea, but because that momentum is so strong, you're waiting for those buyers to try twice now to buy those pullbacks. Then I know exactly where their stops are. I know exactly where their pain points are. That's the key, right? That's where the buyers start going, uncle, right? The buyers go, I'm out. And they're going to get out with their stops. Now, a lot of times those stops will get run, the market will slam lower, and you'll get one more little trap entry off one of my favorite patterns, which is called a 2-try trap pattern. It's a nested failure into a I call them 2-try trap pattern, a little trap pattern above that high. Okay, those are some really great setups here to sell off the high. A straight up buyer failure off the high of that channel, or a nested failure off a big pump and then into a 2-try trap, using, of course, that range as your magnet. Now, I want to give you a deeper dive into all those patterns I just talked about. And to do that, what I'll do is I'll put a little button that will pop up here in the upper right-hand corner for our free trading classes. Our free trading course, you'll learn all about these failures, these traps, and everything we do every morning in our trade room. Again, grab that free course. The best thing is to come out and do it with me tomorrow as a member of the trade room. If you're not quite there yet, I completely understand. At the very least, grab that free trading course. At the very least, you can practice on your own and make the most out of our time together in this newsletter, right? And again, if you want to get registered for tomorrow morning's trading session, I'll put all the links in the description of this YouTube video. If you're on the blog, it's a big blue button for you right below me here tonight on the trading blog. Now, I know what you're thinking. At what point does this thing become a reversal? If it really wants to push higher here, how does it become a reversal? They have to hold the pullback. They have to hold the pullback, and they got to jump. Okay, this is one of the most important things. You can see here, back here, look back here. We had that big move up, and you would think for sure that's a breakout, right? But they have to hold that pullback. If they can't hold that pullback, you know what's going to happen? Those stops are just waiting to get their bell rung right there. And the buyers, right, when they get stopped out, look what happens. The price collapses back down into that range. So in other words, I don't care about how strong the move higher is. All I care about is, can you hold that pullback and make that run? Now, this is where things are going to get a little bit interesting, because we got a big time resistance level back up there at 2184. That's the gap area as well. So the most important thing is going to be, if we get that 1, 2, 3 reversal, I've got to really look closely. Do we bounce off that high, or do we go through that high? If we can get through that high, if we can really, if we really push and we see that pullback to the moving average and it really jumps like what high? Like I didn't see any high back there. If that's the case now we can flip it around. I can use that high there, that low there, right? Notice how I draw that channel. This is the same technique I'm using to draw this channel, right? It's a hidden channel. Then I can buy the low of that channel. But what I'll also do is use that prior high now as a key level of support. So if it really starts cooking, that's what you're looking for. Another scenario would be if we see this market really run, like a real strong run, a shallow pullback, a higher high. This is before they get that gap now. Okay, this pattern will take a very keen eye. It will start off with a strong, that's the key, a strong jump higher. Now, the most important thing is that shallow pullback. Now, we don't want this pattern if they get where they're trying to go, right? So if they get a shallow pullback here and they get where they're trying to go, not going to work. Okay, we have to get it before it gets up there. So the key is I want to see a shallow pullback, a higher high, and a trap low. This is going to be one of those thread the needle type of setups where I'll go out, grab that high, I'll grab that high, and we'll try to time that entry before we get back up to that high. We saw earlier how they jumped up, they got there, right? They got what they wanted. That's why that 2-try trap didn't work. The job had already been done. Right? They'd already finished the job. That's why you don't want that 2-try trap there. This would have been a great 2-try trap if they wouldn't have got what they came for, because the buyers would have had a mission to accomplish. The buyers would have been looking for something to finish off. Once they get it, then they'll dump it back into that range. So again, strong move up, shallow pullback, higher high. Before we get there, right, we look for that trap and go from there. Or it's that strong move up, that, again, that nested. The key to a nested is you're getting lower highs here. Right? The two-try trap, it's a shallow pullback and a higher high. It's a big difference. It's a big difference for the mindset of the market. I don't want to go into too much detail on that, but that's what we're looking for here as the market goes higher. Now, we know we want to stay away from the middle, right? We don't want to trade the middle here. We know that middle is going to be the magnet, so stay away from this. Now, if we just sit here for a while, okay, if we just sit and sit and sit and sit, the plan really doesn't change. I'm looking for a breakout. I'm looking for buyers to try to buy the pullback, and I'm looking to sell into those stop losses. And we'll use the same failure patterns, nested failures and traps that we discussed earlier. Let's talk about if the market goes lower. Now, there's a big difference here between a market that sits going sideways for a while and then goes lower. If we sit going sideways for a while and then go lower, I can execute the same plan. I can buy low. Because the market is so bearish, though, here's the deal. Because we are so bearish overall right now, and because this market has that bearish tone to it, as I run lower, the most reliable type of failure pattern is not going to be just a typical two-try failure. We're going to want to get that nested failure, 1 and 2, and go from there. It's just a little bit more patient. I realize that sometimes they don't happen, but you've got to rely. You got to rest on the fact those are the most reliable because you're going against that momentum. So again, I want to point this out here. If we sit sideways for a while, then we make that run lower, the momentum will be dramatically weakened, right? And at that point now, I'm looking for that nested, that 1, that 2, and then back up into that range. But if they don't sit sideways and it really runs, this is where you've got to be careful being a buyer. This is where you got to take out the big guns to be a buyer now. If it does run without going sideways here, now we start looking for one of my favorite reversal patterns is called a crown reversal. What's going to happen is it'll get a strong shot lower. That, again, this is a very bear market at that point. I'm waiting for the bears to try once, the bears to try twice, but notice what happens on this one. It's a trap low. This is not required on your typical nested failure as we talked about earlier. This is a different pattern. It's a nested with one more layer of confidence, right, with a trap low. I call this a crown reversal, and it's really the best, most trustworthy reversal pattern when momentum is a big factor. Now, of course, at some point, right, we know that pendulum swing is where they're trying to go. They're trying to get down to that $19 a barrel here. 1, 2, 3, break down. Beautiful. Mark the low. Mark that high. Remember, we're not drawing a typical channel here. We're drawing a kind of a professional's channel, if you will, and we're looking to sell off the high of that hidden channel. Or what I would imagine might be the case here is a strong move down. Moving average comes over. It's a shallow pullback. We don't actually get the full pullback. That's usually a giveaway for a trap high off a two-try trap pattern. So those are some key setups we're watching for as we go lower. Again, we're looking at failure patterns and breakout patterns because this is a range market. Just remember, a lot of this has to do with momentum. I cover the vast majority of these patterns in that free course I mentioned linked up in the upper right-hand corner, and all the membership information is in that description. Don't forget tomorrow morning, 10:30 Eastern Time, you've got that oil report. Keep your eyes on the time, or if you're with me tomorrow morning, we'll do it together, right, by looking over my shoulder. Let's keep going. Let's keep going. How about some S&P here tonight? I love this S&P chart. The S&P is littered with great clues here tonight. What do we know about the S&P here? Well, first of all, we know that the bears have control, right? We know that. Remember from yesterday, we had that big wedge up. I'm not sure if you watched last night's news, or you should. We had that wedge up. We talked about that breakout, that failure, and back up again. Well, we got the failure. That was the easy part. But you'll notice what happened. They never got back to retest the high. remember, when the bulls have control, they got one job, and that is to retest those highs, and they struggled and fell apart. Once they fell apart, we can see a 1, 2, 3 reversal, and now it's pretty easy to see these bears have control. This is a chart that not a lot of economists are going to want to see. If you're rooting for the S&P right now, this is not a very good chart to see, because this puts us now within striking distance all the way back to that gap that started off this week, right? So we are threatening now to give back pretty much a good chunk of that progress that we made earlier. Remember, this is that same gap that we just saw on crude oil. It's the gap from Friday's close to Sunday's open. Like I said, on crude oil, leave it there. It'll be a magnet all week this week, and we're starting to see that gap start to play in here now at this point. So we know we're bearish. After the buyers tried a couple times and they failed, we know the bears now have control. In a bear market, this is a trending market, by the way, right? Not a range market like we saw on oil. Oil's a balanced market. The S&P looks very much out of balance, and we're definitely looking to be a seller. I want to be a seller at a level of resistance. There's a couple different spots I'm watching for, right, for key levels of resistance. If I could strip everything off of this chart, I would right now. The most important thing that I can see here, hold on one second. Let me get rid of that one here. Try to keep this as clean as possible. I like this trend line off the low. I really like this hidden channel. If I could choose one kind of chart pattern right now, it'd be that hidden channel. This is very similar to how I do the hidden channel, or the professionals channel as I call it, right, on the crude oil. And you can see that gives me a nice level of resistance to sell there. At the same time, though, we saw one of these bad boys on gold last week. Remember this from gold last week? Doesn't this look like, what was that? I can't recall what date it was. You know, when you do these every day, they kind of blend, they kind of bleed into each other. But you may recall this. I want to say it was last Tuesday or Wednesday on the gold here, and we saw something very, very similar, where we had the combination of a hidden channel along with this sneaky little trend line, right? It was a support trend line, but I'm hoping I can use it as a resistance trend line as well. So when you put those two together, boy, do you get a really good spot there to get short. At the same time, too, you can also see what looks to be potentially for a two-try trap pattern. It's not really the ideal two-try trap. It pulled back to the moving average. Usually a two-try trap won't pull back to the moving average, and then it will come crashing back up for the sell. It's not ideal, but it definitely works here for me. That level at that 25.82 area now, that is a great spot here to look for a trap. So I really like this whole area here. At the same time, you know, we also know there's a lot of bulls out there that are cheering on this market right now, and so I wanted to find something I could protect myself with if it really bounced higher here, and that's where this bigger channel comes from. This bigger channel is my way to know, don't get too wrapped up in being a buyer here. You know, this is kind of my way of putting some guardrails on this right now for us. You know, half the battle is knowing what not to do. Isn't that true? You know, half the battle is not the trades we take, it's the trades we don't take. So I thought it was important that I listed that channel here, because this looks like a bull trap waiting to happen up there, doesn't it? It really does. Because I would imagine if we can get a big run higher, I would imagine a lot of buyers here are going to be trying to go back to retest the high, and they may get caught buying right into that high. So kind of compartmentalizing this, kind of decompacting it right now. Trend line overhead, hidden channel high, right? Lots of levels here to sell overhead. So now you know where I'm looking here. At the same time, though, I've also got a really nice support level here. I want to make sure you know where that is. We've got potentially a wedge, and where these two trend lines collide here, this becomes major support. This support level, I don't consider it to be a support level. It's more like a support range. And what I'm really worried about here is if this market goes lower, we may have a hard time getting short down here. We may have to wait for a pop and then sell it back down from there. So I want to make sure we go over that tonight here as well. So as you can see, I've got a pretty good plan here for the S&P. The first thing I want to do is get short off these highs. Now, this is a lot like for crude oil. If I can get a shallow pullback up into these highs here now, I can simply look for that classic buyer failure into seller pullback combination. This is a very common pattern. It's a very common pattern where you'll see the buyers get above, again, we're bearish. This is not a bull market. Okay, that's the assumption, right? We're bearish right now. So when I get above that moving average, right, when I see this price jump higher here, buyers will undoubtedly, on faster time frames, they're going to think this market's reversed. They'll try to buy that pullback. At that point, we know exactly where they're waving the white flag. We know exactly where their stops are. They're sitting right below those lows. And my job at that point is to buy into those stop losses. Because again, some of the easiest money you'll make is when you're getting short and the counter trend buyers, technically the weak hands in the market, are getting forced out. Remember, remember when they buy that pullback, their stops are sitting there. Oftentimes, it'll produce a nice shot lower. This is usually a pretty easy run to get, but don't chase after it because it oftentimes will pull right back almost to the same spot where you got short to begin with, and you get that pullback pattern. It's a combination. This happens over and over again. It's a failure into pullback combination. Now, at the same time, if we really jump, and this is what I said earlier, we may see people buy this dip and they may get that big jump here. At that point, I do not consider that to be a bull market. It's a lot we saw before, right? You can get a big jump up all you want, but until you can hold that pullback and prove to me that you actually have control of this, I don't trust those buyers at all. So once we get that big jump up, yeah, that definitely tells me, okay, I'll give you the benefit of the doubt, but I'm not going to buy it until I see you hold it. In other words, I'm going to wait for that nested failure pattern. Why? Because I want to sell at resistance, but I can't ignore momentum. Momentum is really the most important thing to keep our eyes on when we get those big jumps, those big pullbacks. Then don't forget, a lot of times these nested patterns, when these buyers fail down here, the market oftentimes runs, and you don't oftentimes get that pullback that you want. Right? I mean, I would love to get that. I would love to get the nested into a pullback pattern, but don't hold your breath. It'll oftentimes go nested and then it will run lower and you won't get the pullback to the moving average because there's so many bulls that got fooled and the bears attack. And so what happens is you look for that little trap pattern now above that high. Right? That's the kind of the mindset of the market. We go up, the buyers try twice, they fail, the market slams lower. That's why you don't get the pullback right away. That's what tells you look for that two-try trap. And of course, where are they trying to go? They're trying to get back down, right? They're trying to get down to that wedge. They're trying to get down to fill that gap here as we go. Another pattern I always watch for on a deep pullback is a two-legged pullback. These are not as common as you would think they are, but they are very reliable. So watch out for the one, the two. We go up and over and sell off that high from there, a two-legged pullback. You could also combine that along with a failure pattern into pullback combination as well. Again, I cover all of these setups in that free trading course that I mentioned linked up in the upper right-hand corner. Now, what if we go sideways down here? There's potential. We might roll lower and start going sideways here. If we do start going sideways in and around this wedge support, we know we're bearish. And we know we're range bound. When I say range, what do you think? Balanced market, buy low, sell high. What are my two favorite patterns in range markets? Failures and breakout patterns. Failure patterns, you wait for the price to pop its head higher. You wait for those breakout pullback buyers to foolishly try buying the first pullback, and we sell into their stops. If the market then reverses and holds that pullback, what is that called? That's called a 1, 2, 3 breakout. Breakout patterns are great, but you got to wait for them. And once you get that breakout pattern, then you can buy from there. Right? So we don't want to simply predict the breakout, especially not in a bear market like this. We want to fade those breakouts. So keep it in mind if the market goes sideways here. Now, a couple things you want to think about. If the market tries to go lower here, right? If we do get this market going lower, what you almost want, this reminds me of American football, where the players who protect the quarterback, they're called the offensive line, right? Where they push, right, the other players forward so the quarterback has time. That's what you need for these bears. What the ideal scenario would be here is if we can make a nice strong push through, right? Imagine some big sellers going, right, kind of just shoving their way through here, right? They're what they're doing is they're freeing up some space. You know what I mean? It's like a push off, and I hate to use sports analogies, right? But it's like you're pushing your opponent away from you to get yourself enough space so you can then sell it from there. So that will be something to consider here. If we do see this thing really start to push lower here, you've got that gap down there. We know there's a lot of support there. So if they really get a strong shot lower, you really got to be careful selling down there. I would wait for that profit-taking rally, get some separation off that low, get yourself a good risk-reward ratio, risk small, right, to earn large, and look for those failure patterns as we go from there. I think that a 2-try trap, you've really got to thread the needle there. It's not going to be a very reliable setup. You've almost got to get it just, again, imagine that big, offensive liner, right, that 400-pound guy pushing right on through, right, the defense, pushing that thing through and then giving yourself some space, profit taking, buyers try, they fail, and one more shot as we go lower. Now, that all can break down if these bears can go 1, 2, 3 and make a run. If they make a run on this, I can sell off the top of that channel and we can go forward. If you look closely, well, I guess if you widen this thing out here, we saw this earlier, we really know where the targets are. We know the bears, they're going to want to get back to that gap. That's the easy one. But if this thing turns into a bloodbath, which it could easily do, that 24.44 level, again, is a big old bullseye right now for those sellers. Just remember, though, you got to be careful here in this area because we got wedge support, we got gap support. I mean, this could easily hit that gap and go 1, 2, 3, bounce right back up like crude oil did, and we're buying the low of that channel, later on in the session. Remember what happened on crude? The opposite was true on crude oil. Remember crude had their gap earlier, right, higher, and they sold off afterwards. They may just get that gap fill. We may get that gap fill and they might be gone from there. And we're left waiting for that hidden channel and buying that low. Very difficult to predict that reversal. I wouldn't even recommend trying to predict that reversal. That's a fool's game, right? That's very unreliable price action you're trading. Much better if we get that 1, 2, 3 reversal to buy off of that low. Or if this thing really hits the skids, strong move down, pull back to the moving average and run through. Yeah, mark up that low, mark up that high, selling off the high of that hidden channel. Or if it really collapses, shallow pullback, lower low, right? If we don't get the pullback, that sets up for your 2-try trap, right, to run down to retest those lows. So a lot of this has to do with, right, how much can they push through that low here? Do we push through it at all, right? Do we collapse back down and go sideways? You know what I mean? That's a viable option here as well. If that's the case, 2-try failure, or, right, if we go sideways here, a 1, 2, 3 breakout, mark the low, mark the high, and we're selling off of that high. All of this is the same basic strategy, just applying it in different ways depending on location and momentum. And don't forget, we're covering all the details here right now. We're going to do it together tomorrow in our trade room, so make sure you grab that link in the description and get registered. Let's wrap this sucker up here with gold. Gold, you can tell they've broken free of that range from yesterday's chart, right? This is that big old range from yesterday. They obviously have a 1, 2, 3 breakout, if you will, 1, 2, 3 reversal. This was a great example if you tuned in last night on the newsletter. We talked about the fact that if we got a strong move down, anytime you see a breakout with that much strength, you're not going to want to get in right away. You're going to want to wait for 1, wait for 2. So if you watched last night's newsletter, if you knew this was a nested, you stayed out of trouble. If you got too aggressive on it, right, you learned a valuable lesson. Again, anytime we have a range like this, I want to buy low, I want to sell high. But, like I mentioned, if you see a relatively, small move out, yeah, that's a failure back in. But if this thing if it just crushes it, right, like we saw in the overnight on gold, now at that point now, it's just you're walking into a freight train trying to buy into that, right? You want to wait for that second try and then go. This is something that would have kept you out of trouble there, right, on that gold, right? We got that big move down, one try, two try. If they would have failed, this would have gone right back up into that range. But instead, it turns into a failure, into pullback, and a run going lower. So we know we're bearish. We know we are no longer in a range any longer. We're now a trend. And of course, anytime of a trending market, I want to go with the trend direction. I want to use channels for my key levels of resistance. And I want to use measured moves for my targets. It's easy to see we are bearish. A bear market here tells me that I want to be a seller here at resistance. I'm lining up off of these lows right now, as you can see, trying to find some levels of resistance. I'm marking up those lows. I'm bringing it up around those highs. That is a beautiful area of resistance to sell. I also like the fact that we've got what appears to be a gorgeous two-try trap. This is the stuff that we look forward to, right? You can see a great example of that where they don't pull back to the moving average. This is exactly what I keep talking about. Strong move down. See that shallow pullback? What that means is, remember, people want to trade that moving average. The sellers that want to sell that moving average, if they didn't get the short, they're still waiting up there most likely. So as we see the shallow pullback now there's I can almost guarantee there's a big order, right? Big block of orders sitting up there right above those highs here for that two-try trap. That is a viable setup we're watching for here. What I would really want to get, though, is I would want to make sure we incorporate at least one of these, that prior swing, right, and that channel. So you can really see this come together here for that two-try trap in the right location up overhead. Love the fact we get a lot of resistance levels up overhead here. Now, I'll be honest, I also can see there was a little tiny range up here as well. That little range up there, what are ranges? Ranges are magnets. That flat moving average gives it away, right? Anytime you see a range like that, we always know there's potential. It may want to make a move back up. I'll bet you have a lot of sellers that if they get the shot to hit this thing around that 1620, 1625 area, they're going to load the boat up there, because I think a lot of bears right now probably feel like they may have missed their window here on this. We know where the bears want to go. They want to get down into this runaway zone here if it keeps on bleeding lower. And I won't mix words on this. There is a big bullseye right now for these bears at 1500. We have what is obviously two ranges here. One range there, one range down there. If you have any experience whatsoever with volume analysis or market profile, you know that, right? When we shift from one high volume area to the next, right? Look at these volume spots. Now, I don't need to put volume on here. You can look at overlapping candlesticks, but we have basically two big volume. And again, I mentioned this earlier, you don't need to put a volume indicator on here. A lot of folks ask me, why don't you use volume? You really don't need to if you know how to read a chart. Anytime you have overlapping candlesticks, you know there's a lot of volume traded hands there. This is why I tell people, just get rid of all the indicators. Just learn how to read a chart. You don't need all these extra fancy bells and whistles, because all they do is, they confused me. They may not confuse you, but when I was a new trader, having too many cooks in the kitchen made your head explode, and it was difficult to really get everything to kind of work together here. So, long story short, this is for the gold bugs out there right now. This is not a good looking chart right now for the gold buyers here right now, because there's a big old bullseye down there at that 1500 area. So that's obviously kind of a cherry on top for these sellers at this point, right? But that's kind of where, if this thing turns into a bloodbath tomorrow, that is definitely where they are hunting for here as we go. And as we open up in Asia right now, you can see here it's actually poking its head even lower here. So what I want to do now is I want to line up these. See what's happening? Yeah, really, really strong pushing lower here, lining up those lows, right? Bring it up around these highs now, and now we can. I'm good. I'm glad we're doing this a little bit later here tonight. Now I have a little bit better, right? Now what I can do is I can bring this down. I can bring this down, right? And now we can kind of structure this battle zone at a lower place now. Right, so now we can kind of adjust this lower here, and the plan is going to be pretty much the same here. At this point now, we adjust it lower here on the fly. How about some service, right? How about a thumbs up for that, right? Not many real-time adjustments here in this newsletter. How about a thumbs up for that? Can I get a subscribe for that? That's pretty cool stuff. Anyways, all kidding aside here, think about the strength of this market. If we can get back up around these highs here now, I'm looking for those buyers to think the buyers stole it, right? The buyers want to buy. That's a buyer failure into a seller pullback. Right? We know where they're trying to go. They're trying to go down into this runaway zone as we go, right? So pulling back here, get above the moving average, get those buyers try to buy, right? They'll try to foolishly buy off that pullback. And of course, we'll look for selling opportunities with a buyer failure into a seller pullback here. Or maybe it really jumps. Like I mentioned, there's that range overhead. If it really jumps and pushes up into that secondary battle zone now, it may not make it all the way, but you know what I mean. If it really cooks as it goes higher here, now that momentum is way too strong. If they hold that pullback and go, this becomes a 1, 2, 3 reversal. And I can buy the low back there. I don't try to buy that first pullback because of reasons we talked about. You can't just buy a pullback because it's a strong move. You're going against the overall momentum, right? You can buy the next pullback. That's a very reliable, right? That's something you can pay your mortgage with, but you're not going to have very good long-term results if you get in the habit of picking bottoms, right? Picking reversals like that. What I'd rather have is, as we go higher here, moving average comes over. And again, we blow through the first battle zone. Now it's a nested. It's a 1, it's a 2. Now we know everybody's roped in now, and now we can sell into those stop losses. And keep in mind, too, a lot of times these nesteds, they get everybody fooled, and when they go, they really go. And you want to keep an eye out now for that 2-try trap before we get back down to retest those lows. So some really great setups here as we go. Again, we know we're looking for a reversal. 1, 2, 3 reversal. They're going to hold that pullback and jump. Mark the high, mark the low, buy the low. We know they're trying to go. They want to go back up into that range. I'll believe that. I'll believe that when I see it tomorrow. It looks like these gold bears are right. Got their hooks in this thing here right now. Also, too, don't forget too, if we go sideways down here, this market may chill out a little bit here, go sideways on this. Once it goes sideways, when I say range, you think failures. We look above the range. We wait for that pop to go higher. We wait for those buyers to come in, try to buy that pullback, and we're selling into those stop losses. Also, too, keep in mind, too, it may keep bleeding lower. Right? If it keeps on bleeding lower, this will become a spike in channel pattern. And not a lot changes, but you really want to pay attention to that first swing. That's where your import level will be. Same thing. Go up, catch those buyers, right? Catch those buyers loafing, and we can sell right into those stop losses. Boy, I haven't heard that term loafing in a long time. My grandmother used to tell me that, right? Stop loafing over there, Joey. I love it, though. Hope you guys learned a lot here today. Hope you had a great time on the video. We've got a great day coming at us tomorrow, Wednesday's trading session. Make sure you get registered, of course, here as a client and come out and do it with me every morning at the opening bell. My advanced course is what you want. That comes with all of our beginner, intermediate, our online trading sessions, right, every day together, right, in our trade room, all the ongoing support, all the tools and templates. I'll put all the links again in the description of this YouTube video, or if you're on the blog, there's a big button for you right below the video tonight on the trading blog. Please don't let my ugly mug fool you there. I'm a very nice guy. Call that toll-free phone number. Don't let my ugly mug scare you away. Call that toll-free phone number anytime you guys have any questions. If the telephone isn't quite a good fit for you, use that live support tool. I'm always here to answer your chat back and forth as well. And as always, if membership isn't quite right for you, the most important thing is learn the setups. That way we can follow along together every evening. I teach all of that in our free trial as part of our free trading course, and I'll also send you hundreds of examples of how we apply this stuff to our favorite futures markets. And before I go, as always, I want to wish everyone a very healthy evening out there. as a human being right now, I'm pulling for us right now. I know life is tough. I know the world is chaotic. It's very scary out there. Our emotions are all over the place right now. So from one human being to another, stay strong out there. Stay positive. Keep your heads up, right? And be well out there. Take care of each other around you. But as a trader, right? As a I don't want to say cold-blooded, but as a trader, right? I cannot let those emotions distract me right now. Tomorrow, my job is to come in and execute. Put the blinders on and go to work. The easiest way to get through this is to come out and do it with me every single morning. Hope I'll see you there tomorrow. If not, drop me some comments. Let me know questions. Hit that thumbs up button for me, and we'll see you guys on the next newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.